What's going on, everybody? In this section, we will be going over how to trail your stop loss. So ultimately, it's pretty discretionary for when a trader will decide to move their stop loss into profit. So say we're floating 30, 40 pips in profit, and your original stop loss was 30 pips away. At that point, it really doesn't make sense to hold your stop loss at the price that it currently was at, considering that you're already in profit. You might as well make it risk free. Take that risk off the table and even take some off if you want to do that, or at the least let it run. So don't make fun of my drawings here, but I went ahead and made a bit of an example of what I'm talking about, and we can kind of go over what we're looking at here. So, as we mentioned in sections prior, this is a clean range down, right? So this is a clean range down, and we're targeting this area here. We're going from zone to zone. This is the resistance. So, say price broke above this resistance, we now have a candle that closed above. Next candle comes down, breaks this previous high, boom. Okay, so we'll just call this a 80 pip range. Okay, 80 pip range. Cool. This is 80 pips. We will say that we entered here and kept our stop loss back here for 40 pips. Okay, 40 pips. So on this candle, we waited till we got the wick down to retest this broken resistance. We entered on the break of the previous candle's high. Okay. So let's just say we go in profit, 20 pips, right? So we're about 20 pips up now. This candle closes. The next candle opens up, comes down, boom. Now we're in profit about 50 pips, right? So at the least, I need to take this stop loss from here at least to break even. I'm honestly, knowing how I trade, I likely would take some off the table when I feel 50% of the range, or when I'm at least 1 to 1, to at least reward myself for calling out a good trade. Take some off the table, and in turn, you can let the rest run risk free. So, most candles, as we know with candle anatomy, once again will create a down wick, breaks this high once again, boom. So let's say we're 63, 65, 66 pips in profit, right? That stop loss can now be moved from break even to under here. Because remember, if price wick down, broke this high, it has no reason to come back and break its own low if it wants to continue to the top of the range. So with that being said, in a perfect world, next candle would open up, boom, give a small down wick, go ahead and retest the top. And that, in a perfect world, is how I would manage my position while in profits. So first off, I would identify a target. I would wait for price to give me some indication of a pullback, especially if price has been rallying the way it has been on gold these last few weeks. We don't want to enter at the top, right? We want to enter at a zone in which we have an indication that price will give us a resistance, close above said resistance, wick down to retest this aforementioned resistance, After we get the wick down, that's an indicator that we are retesting, breaks this high with clean candles to the left. Remember, we want to see clean candles to target to the left. And as we continue to move in profits, your stop loss can continue to be moved in hopes that we reach this final destination. Anything that happens after this, not our business because we got our move. We saw what we want to see. We got this downward movement, retest, continue. And that's how you trail your stop loss while in profits.